Righto, buddy waters, we are back. Calendar year 2025, not F. I'm in financial year mode. Sorry to break it to you all. I did not want to be here today. I could have easily retired, but
starting the hedge fund.
I had to work, mate. Said I couldn't have lived a more Australian summer. I drank a shitload of beer, even got a case of VB. I smoked heaps of meat. I didn't smoke. I didn't do anything illegal. I'm a new man. I've quit the vape.
Yeah.
I played a shitload of golf and watched a few of my stocks go up. Just on fire.
You are the
What about you
quintessential
boys?
Aussie bloke.
Oh,
Matthew.
mate, what are you boys? What did you boys get up to?
Had a whirlwind trip overseas, mate. It was awesome.
ya?
Yeah, saw the family in Europe. Loved it.
I quit all of the bad food, mate. I'm on a New Year's resolution. Let's see how long it'll last. I hope to lose all the weight I've put on since starting Money in Mine.
I bloody ate as much as I could, and I friggin' enjoyed it. Back to push-ups today.
How many are you starting with, mate?
What have we got? Boy, a bit to catch up on. Bloody, there's been a bit happening. The big news that you boys are going to dive into, most logically, Glencore Rio talks. Past tense, pre-tense, future tense maybe.
Mm-hmm. Big news would be the biggest mining M&A deal, if true.
Yeah,
Be like,
company's
bye,
pretty
BHP.
quiet on it. But
Yep. The other one I'm going to talk about, Matty, is the news out that the Ioneer company we haven't talked about much, their Rhyolite Ridge lithium boron project in Nevada, has kind of got some upsized funding in line with the DOE. Some implications for Sibanye from that one. I'll have a yarn about that. And you guys are going into goldies.
We've got to go goldies because in honour of Ali GC, who is in the building, she will be on camera this week. We better go through all the Australian goldies. Pre-quarterlies out, some quarterlies out. Few there's some ups, there's some downs, there's some mid ranges. We're going right into it. We need to get into oil and gas as well. I think bit of bloody. Have you watched Landman yet?
I haven't. I've
seen the trailer.
You've got to get on the Landman
because the bit where he's like talking to his granddaughter or something about
No, it's the lawyer.
Is it the lawyer? That's just. I put that clip on Twitter. I was like, this is my new favourite show.
So I heard you met the
Australia's-
inspiration behind one of the characters.
I met Australia's Landman,
Who is he?
Matt Hall.
Matt Hall.
Get wet. Played golf with him
He's
non-stop.
used to work in oil and gas too.
Mate, he was Australia's landman
Yeah.
for,
Is that right?
for oil and gas, I found. So we played a few games with the Get Wet man, and, mate, he was the man that made shit happen, and he's transferred that oil and gas landman knowledge into... He is now the water bladder landman for the mining industry. So, tell you what, she's going to be a big bloody get wet bladder year for 2025. So, mate, I would say get your orders in quick, but you don't need to because he'll just keep ordering 2 million litre friggin' get wet bladders for you till the cows come home.
And
So-
Until there's
install
no
them
more
for
water
you.
left to put in there.
Yep, give Matty Hall, the landman, a call. That sounded good. Right, let's get into it. Glencore rumours with Rio, big super duper mega merger. Is it true? Has it been chatted about? What's the go? Take me through it, boys.
Pretty interesting rumor to come back to work to. It's funny, right? It was like 3 days ago, Bloomberg, they broke this story, big story. Glencore and Rio Tinto have been discussing merging, which would be the largest mining merger ever, and then would create a company, if the two companies did combine, that would be bigger than BHP. In US dollar terms, Glencore's a $55 billion company, Rio's $105 billion, and you create something that's, it's like 20 odd billion larger than BHP if you did it at nil premium, which wouldn't happen, but yeah.
Assuming they'd keep the coal.
There's a lot of assumptions and permutations and everything like that, but
Which Rio got out of recently.
Yeah.
Anyway, you're going to take me through it.
Funny, the benchmark is always bigger than BHP, as if that were the purpose before it. So the talks apparently are not active at the moment, though not the companies, but it was reported with people in the know, as the journalists sort of say, that discussions happened throughout the second half of last calendar year, aren't ongoing at the moment, and a lot of the articles referenced the point that these companies had been in discussions about a decade ago, in 2014. So a couple other basic details. Both the companies have London listings. Rio obviously has the group
PLC.
structure with the PLC and the limited with an Aussie listing too. And you've also got to keep in mind these UK takeover rules, which we spoke at length about when we were talking about BHP and Anglo in the first half of last year. That sort of references like when you can talk about a deal, when you have to make an approach, and the quiet periods and these sorts of things. But as I said, pretty limited information. Neither of the companies decided to comment on it, but we will dive into it regardless.
Like decision not to comment on the rumor, like that was noteworthy in and of itself, because both companies had an opportunity to address the Bloomberg article on Friday, which is a trading day last week. Neither of them did address it, and it was subsequent to neither of them addressing it that it came out in a follow-up article from Bloomberg that talks are not currently active. But it was a tell, the fact that there was no addressing it from either company, that they were in a window of no talking, because that, like, given the takeover rules, you would address it if you're in active discussions.
So let's get into who might be instigating this and why / kind of how the media got their hands on this piece of knowledge. We know there's always a kind of reason behind it. It was a big deal that the Anglo talks got leaked. When they did, wasn't an ideal time. There's always a bit of a motivation, and you've got a bit of a theory behind this one, Trav.
Kind of. I think you can pick up some pieces and some clues and try and figure things out. But like in general, if you're in a period of like no current active discussions, but you have had some previously, but you're in a kind of an ice cold period or something like that, then if you're trying to instigate some more discussions, but you haven't had too much luck trying to reignite talks, then you can do the strategy of leaking the fact that talks happened previously to try and reignite these discussions, right? And I had one observation on the Bloomberg story that did break. When it first landed, the byline looked like this. So you can see the byline there. And then a few days later, they changed the order of the journos in the byline. And if you're listening, not watching, originally the youngster Archie Hunter was listed first in the byline, ahead of more senior reporters Thomas Bouchival and Dinesh Nair, which to me would suggest the scoop was his. You put him first, it was his scoop. But then he gets shuffled to the back a few days later. So if you look at that same article today, he's there at the back, not the front. And I wonder if it might have been too much of a tell who the sources were, if Archie's name led the byline, and hence they shuffled him back. And the reason I say could have been too much of a tell is because Archie reports on commodity traders only. So maybe that narrows down things if you're trying to deduce where the source of the leak may have come from.
I will say Archie Hunter, sick name for a journo. That is up there with Elliot Rocket. Like, that is sick, Archie Hunter. Go you. I don't care what, you're right.
All right, before we dive into a potential combination and a couple of thoughts on that, let's take a peek at the shareholder returns, total shareholder returns over the past few years for the two companies, as well as a few other majors out there to give a bit of a comparison to it. So no secret, 2024 was a pretty disappointing year for commodity businesses. Glencore down 23%, you can see on the chart here. Rio down 14%. Zoom out a bit, over 5 years, Glencore's total shareholder return, so talking about share price plus your returns, whether that be dividends, special dividends, these sorts of things, is 95%, and that edges out Rio, who delivered 65% over the same period. Zooming out a bit more, though, Glencore's total shareholder return is 28% from when they listed in May of 2011. That is pretty disappointing. So we've often spoken about the fact that Glencore is cheap, Glencore has great management, all these kind of points. That's commonly cited in the world that we kind of operate in. People love to praise their management, their kind of counter-cyclical, contrarian thinking, but it hasn't been a great ride for shareholders. We saw the interesting kind of activism in March of last year with Tribeca was kind of welcomed mostly by other shareholders and so on, but that all has to do with the fact that shareholder returns have not been that good. So,
and it was the last quarter of last year it really dove back off, because you can see there they were tracking pretty relative to BHP, and then Gornsky's, and they're pretty much back down to where they were before Tribeca went activist.
Especially when you compare it to
met coal prices came off a lot.
Yeah, and copper.
Yeah, but even relative to their commodities that they produce, they disappointed. You
Mm.
know, so it was a bad year, and all of commodity companies versus the indexes versus other sectors out there which generalist investors play in. You know, it was pretty bad. A lot of them tore quite a bit higher. 2024 was mostly a good year for generalists and other sorts of investors, which just made the underperformance more kind of stark in its nature. So
The 20% TSR since the 2011 listing probably doesn't capture the real ride for most Glencore shareholders, because most when they listed, that was a wonderful liquidity event for the owners of the business.
So you look at 2015, 2016, and that
Yeah.
TSR is negative 80 some percent.
Yeah.
So
You had a bit of a debt kerfuffle there, and
the
the trading business
2016
was
downturn.
valued on an enormous multiple, and that kind of cratered. And then
now it's
it's
not.
been a grind since.
But let's talk about valuations, right? Because the fact that a lot of shareholders of Glencore will point to is that even against other peers, bearing in mind that they have this marketing business, this commodity trading business, the foundation of the business, it's glaringly kind of cheap. It trades on a very weak multiple, right?
Big time, 100%. I think I looked at the numbers, JD, and I got like it was on 26 forecast EBITDA. It was like traded on 3.9 times 26 estimates, which is like bottom of the barrel, the second lowest versus the only major with a lower multiple is Vale, because they got the Brazil factor. But when you've got a trading business which should command, represents a good chunk of earnings, should command a much higher multiple than a standard mining business. Yeah, it's a pretty beaten up multiple.
Yeah,
for a robust business.
Never mind to listen to podcasts talking about other sectors and they're talking about revenue multiples and all this sort of nonsense.
Go tech.
Yeah. Maybe we started a podcast on the wrong industry.
Yeah, Jesus Christ, that might be a natural home for me, JD. That's right up my alley.
So let's talk about why the businesses should kind of merge, and I think we can flash a bit of a different light to what other media organisations took to this one. I think there was, I thought it was relatively light on in news, given the potential significance of a deal like this. There actually wasn't that much discussion about it out there. Granted, it's early stages and all these sorts of things, but maybe
Is
everyone's...
it early stages, but because I heard in WhatsApp that it was called off last year.
I think that's the read through, even in the second Bloomberg article, is that there were some discussions. It was kind of put on ice, and hence
I meant they didn't advance far in that sense, but I mean, merits
WhatsApp
to
never lies.
Yeah.
reference WhatsApp.
to your question on why merge, I want to come at this from the perspective of a Glencore shareholder. I'm not a shareholder. I've thought about it a lot, and if there was a major that I wanted to put money into, like Glencore is the one that I'd be most inclined to do it. But if I own Glencore stock and I wake up to the news that there's a potential combination with Rio Tinto at the current share price, I'm not thrilled at all. I'd be pretty disappointed. I'd be a bit frustrated. And that's not to say there isn't some merit to this. We'll get to that. But the reason I'd be frustrated is this: of all the majors, Glencore is the only one in my opinion, where management truly does think like owners, and they are owners. And to progress at that firm, you've got to be brilliant, and they're cutthroat, and they truly do have people who just get capital allocation at at multiple levels of that firm. It's kind of like, if you're a high performance driven kind of person, and you want to get rich, but you also want to be remunerated. You know how to think really well. Like Glencore's the place for you, and you can excel there. And they've got a bunch of brilliant people who really, really get capital allocation. Notwithstanding, though, capital returns have not been great over the last period, like you said.
Makes it all the more interesting.
Exactly. For example, just think of the acquisition of Elk Valley Resources when that happened. Not all that long ago. The way they pulled that off, no other major could have been as nimble, as aggressive, as strategic to get that deal done. To go hostile at a time of the year when everyone else is kind of switched off. I think it was around just after BMO that they come out with this big deck. Gary Nagel's just talking about the merit of Glentech, and what do they come away with? They picked up Elk Valley. It was pretty amazing kind of outcome. No, I don't think any other major could have performed or manoeuvred in the way that they did. And yet you look at Glencore's multiple, and like we said, it was like four times or 3.9 times 26 EBITDA. Like four times EBITDA, despite a good chunk of the earnings from the trading business, is kind of crazy. But if I was a Glencore shareholder, I'm frustrated that there's a possibility the business could be engulfed into a bureaucratic, bloated Rio Tinto, while there is some low-hanging fruit out there for Glencore to re-rate to a much more appropriate valuation, before doing something like that. So what's the low-hanging fruit? Like, I think these are the low-hanging fruit in my mind to just deliver shareholder value in a shortish period of time. Delever the balance sheet. This is just a time thing. Elk Valley earnings will pay down the debt over time. You've got the lowest cost, met coal, highest quality met coal portfolio in the world. Like, let it do its thing. It'll pay down that debt. Second point, actually deliver Argentina on the copper side. That's like a big value creator on the copper side that the market just doesn't believe yet, but it's real. They've got some fantastic growth projects in Argentina that aren't talked about and aren't kind of part of its value. So they can put more work out into the abyss so that the market can understand that better. This is a big one. Re-domicile the listing to the New York Stock Exchange. Europe is dead. London listings for mining are dead. There's no capital there. Go to New York, get your S&P index inclusion, and that's where you get the healthy multiples in our industry. It's harsh, but it's true. And the fourth one, and I remember this one from Tribeca's activist push, you could sell down a minority stake in their trading business to a sovereign wealth fund at a pretty healthy multiple, and that lets the rest of the market get a see-through value on what the value of that trading business should be, and then your whole business, the brokers and everything, just sort of re-rate what the value of the business is. So those four things are all completely achievable over like a 2 to 3 year timeline. And what's the re-rate from achieving all of that? I'd venture to say it's pretty substantial. And if you're a Glencore shareholder, you're holding the stock anticipating them to execute on the low-hanging fruit because it's a highly capable team, and a stock that appears to not be reflecting what full value should be there. I doubt you'd want to see the business rolled into Rio Tinto when the share price is £3.80. Like, you deliver the low-hanging fruit and then explore deals if it's there to be done. But I'll also give them the benefit of the doubt because maybe there's a lot more than meets the eye here. Like, the whole rationale for doing a deal, there might be some 3D chess going on that just isn't so apparent from a Bloomberg article too.
Yeah, I'd sort of hazard against talking too much out of school because I'm sure there's much more than meets the eye. The third point is super interesting, re-domiciling the business, listing on the NYSE. People always talk about just get in the S&P 500, get the index inclusions, get the passive money, and the share price will look after itself. They don't even talk about making the business a better business. They just think you can do that and it'll all look after itself. It wasn't that long ago that Gary Nagle said, we're pretty comfortable in London. I think the complexities and the risks don't outweigh the costs of doing that. Who knows, they could be working on it in the background all the same, but it is a super interesting one that's been around for quite some time. It's not something that's just happened overnight. It's been a factor. People have been asking this question for years now. Completely agree with the other points. Net debt, last time I looked, I think pro forma, assuming everything kind of is done, sits at about $10.5 billion, and that's taking into account Elk Valley and everything that's just happened. I think it's a matter of time before earnings help pay that one down. Viterra, that sort of deal kind of closing and they get another $1 billion in and things kind of improve on that side of things. And yeah, the trading business, I mean, I think, did Tribeca say Berkshire Hathaway should take a peek as well?
They did,
yeah.
but...
And they also referenced coming to the ASX, actually, not
They did.
Not the NYSE, but yeah, I would say NYSE is a
Were they saying dual, but like American and Australian listing?
I think down the track, yeah. And not that they had any problem whether you pursue NYSE. I think they just had the preference for ASX, but I think both would have been a better outcome than the status quo that we see at the moment. But yeah, if there is any company that really has that backing behind management, that there's almost a cult-like, as we've heard it called, it is Glencore, and people back the management team. So hopefully they can deliver on this and make it happen. And let's see what the share price is in a little while.
Make it happen. What do you mean? Make what happen?
Deliver on that low-hanging fruit, as you put it.
Do you think the bit of the 3D chess if you look at Anglo American, for instance, is there a bit of 3D chess going on that maybe Glencore might want to tie up with them instead of BHP? Because imagine having 80 odd, what's that gives them 80% of Kolwezi. That becomes a pretty big copper unit. Is there, there was talks, we've speculated before when BHP was looking at Anglo, would Glencore get involved? Like, as you said, being gobbled up by Rio, they're sort of, selling away that low-hanging fruit, whereas combining with someone like Anglo, where the majority of Anglo's NAV is, I assume, the copper, that could create a pretty big copper powerhouse in South America.
You want the Glencore business to live on. Like, you want that management to stay in place. You want that trading business to be as fruitful and grow. You don't want it to become Rio Tinto. You don't own Glencore for it to, you know what I mean? Like, I think Anglo is a much more compelling proposition. My intel has been that BHP has had conversations with Anglo's big shareholders, and Duncan's basically got, like, I don't know how much longer, another 6 to 12 months to sink or swim, and if he's sinking, then they'd be in favour of a BHP. So it's kind of like BHP's kind of got their foot on it. They're the preferred people to buy it at some point in time. Like, Duncan's either got to, make things honky dory, or he's out the door, and the business is BHP's in one form or another.
Yeah, that's the only link, isn't it? It's Kolwezi between Anglo and Glencore. So there are other mines, Los Broncos, and that. They're
assets in which Glencore and Anglo both have an ownership.
Yeah, it's only Kolwezi, isn't it? They're 41% each, I think.
Off the top of my head, yes.
Like that. Yeah.
Yeah. I find this notion of 3D, or some people sometimes people say 5D chess kind of interesting. Like, I've heard people say they never want to be on the other side of a negotiation with Glencore. Very smart people, but we sort of thinking the same about BHP, and then it turns up it wasn't really 3D chess they're playing at all. They just butchered it. They got it, the timing all kind of wrong. I think not that they're not smart people, but we gave them a lot of credit for how they kind of thought it out rather, and wasn't really thought out so smart in the end.
Maybe it was the necessary step to take in order to pick it up 18 months later.
Perhaps, yeah. Hard to say.
Maybe they'll all just stay separate forever, and they're just all too freaking big. But that'd be boring.
Well, I mean, Dryblower made a interesting comment. He just put out an article I saw just before we started recording, which I found actually quite interesting. I think it was headlined "Time for Mega Breakups, Not Mergers," sort of pushing forward the idea of companies getting smaller rather than bigger. And I mean, a combined Glencore and Rio Tinto with assets almost every bloody continent would be a nightmare to manage. As well, if you look at it from the owner's perspective, the people with capital, it's harder to grow when you're just that enormous. It's great for management. You can command a bigger paycheck and everything as you get bigger and bigger. But a lot of the investors rather have companies that are a bit smaller, where you can actually grow and earn multiples on your money, as opposed to just that dividend every year. So I thought it was a kind of interesting premise to put forward.
They'd have a bit going on with, they got the Arcadium stuff deal live at the moment, Rio, and the Rincon investment. So they're going hard lithium, then chuck a bloody merger with Glencore in there. Far out. That'd be going off its head.
And to your point on, like, splitting, I think Koala's rhetoric was that, you could combine them, but then you effectively have two separate businesses. One is just like a bulks heavyweight with the iron ore, the coal, the salt business, and then base and battery metals, kind of powerhouse as well as a separate vehicle.
Consider it, and because Rio it produces more iron ore than BHP. Like, they're very, very bloody iron ore dependent.
And Simandou coming on this year as well.
Yeah, huge.
Yeah.
So,
the last sort of comment I'd make is a bit of a pushback on this idea that it's all about copper. I think a lot of people say that, and copper is integral, no doubt about it. But there are so many other moving pieces here. So Rio do about 800,000 tonnes of copper, Glencore about 1 million tonnes. If simply just push the two businesses together, the EBITDA is 20% copper. But I still feel it's somewhat a bit simplistic. There's so many other motivations and incentives to doing a deal here, whether that be liquidity for some shareholders, some bigger shareholders, there an improvement in asset quality if you're looking at some of the assets on the other side of the fence, changes in the multiple that you trade on, all these sorts of things. I think there's multiple reasons behind doing a deal that would be as complex as
Good pun
this.
there.
And yeah, I think it's all about copper is not the whole truth.
It's like feels like lazy reporting when you read. Anyway, my thoughts.
So,
Who knows?
who knows?
Who knows, mate? We've got a year to figure it out until
do.
Christmas.
Yeah,
Yeah.
Can't wait.
these I think there's a fair dance ahead. Yeah, so in that year, Matty, there could be a bit more to this story.
Between the four of them.
yeah,
Rio, Glencore, Anglo, BHP. In whatever combination.
yeah.
We're going to be talking about them a lot this year, I reckon.
And that's if you just like zoom out as well, right? Like Dryblo's advocating to separate. I think the theme here is the opposite in a big way. Like we haven't seen mega mergers in a long time in our industry, and in the last like 12 months, we've had now pretty legitimate rumours of consolidation of four of the largest kind of diversified miners we've got into two. Neither of them have eventuated yet, but that there is reflective, obviously, of pricing. These things happen in waves, and the internal thinking, I think, amongst these like major miners is that the best use of capital allocation is to acquire growth at current multiples as opposed to invest in new mines where costs blow out and all that sort of stuff. That's what they say.
Or get lucky finding one.
Well, but even getting lucky, like building the thing is the headache. Like buying it far and away exceeds. And I do think if you step back, like, yeah, this is a wave of mega deals and stuff, but stepping back, there has been a bit of a hollowing out of that middle sort of group of companies. There's the really big guys, and then there's the single-digit billion market cap.
No, it goes Trump meme coin, then the really big guys. Then
Oh, God, speaking of which, I've got
we could talk a bit.
WhatsApp fucked me up there. I tried to put money into my Binance account, but it must have been the wrong Binance to buy some Trump coin. Now my credit card's fucking cancelled because it was must have been a dodgy Binance app.
At least
So
we got to hear
effectively, I saved money because I didn't get defrauded.
At least we got to hear the hold music for a couple of hours this morning. Blaring the old 2000s tunes.
Oh, very good. Well, plenty more of that's come. Now, new segment. 6 degrees of separation between something.
Tell me, Matty.
Inspired by the Great Directors special this morning.
Yeah.
Moneyofmine.com, everyone. Go subscribe there. The newsletter is back. There was some very depressed people. And one of them about to mention here, actually, that wasn't getting the Directors special for a month.
Is it the one they named the cyclone after?
Well, and look, I'll just read out this headline from High Grade It. Pilbara Ports Authority closed the ports of Dampier, Ashburton, Varanus Island and Cape Preston West late Saturday as tropical cyclone Sean formed off the coast. Mate, tropical cyclone Sean. Now that is named Sean for a reason, lads. Did you know that? It is named after Sean Russo because a tropical cyclone is a reminder. Sean Russo being part of Noah's Rule, who are the hedging experts in our industry, as cyclones are a reminder to all bloody miners you need to hedge the impacts of cyclones.
Yep.
Which means you should be hedged against any negative impact on your business. Hedging is another word for insurance, and CRE Insurance are the best insurance brokers in the business. There's my 6 degrees of separation.
You connected a cyclone to CRE Insurance.
I connected that to Dave Harrison being in Perth this week.
Oh.
The CRE Insurance bloody legend. And Steve Tarr is always in Perth.
He can smell the cyclone.
Mate,
He's like...
mate, they need to get a CRE symbol in the sky like the bat signal that miners get to shine when they need protection.
So preferably do it the day, more than a day before the cyclone comes.
Mate, shine it
Call them up right now.
Yeah, exactly.
Business interruption,
They're
property damage. That's what insurance is for. That's what.
Yeah, maybe there's a fucking mega merger. Noah's Rule and CRE Insurance.
Hedge all your bets.
Yeah,
good on you, CRE.
Right. Ioneer funding.
Yeah.
This is huge.
Never fucking heard of them. Did I? I think I heard of them last year. Are they pretty big?
About $500 million market cap.
Do you remember Joe Lowry asking us what we know about it? Anyway,
Oh, yeah. Still don't know anything, Joe.
Yeah.
These boys do.
I'm coming from a long way back, but I thought the news was pretty interesting. Yeah, so Ioneer, they're developing the Rhyolite Ridge lithium boron project in Nevada, and the U.S. Department of Energy has committed. Mate, get a hold of this number: US $996 million in a loan for the development. That's up $268 million from the conditional commitment 2 years ago.
God, that's bloody. Any ABBA should get their hands on a bit of that too.
It's amazing.
They've outdone any ABBA.
Yeah, so here's the terms. It was like concessional finance. You get a bit of, great terms. This is a 20-year tenor at an interest rate fixed to the long-dated US Treasury. So it's as good as it gets on a concessionary finance basis. Ioneer shot up 20% on the news, but the loan's still got a few conditions to meet. The interesting one to me is the condition for Sibanye-Stillwater to fund its US $490 million for its 50% share of Rhyolite Ridge. This was agreed a long time ago, and it's an interesting conundrum for Sibanye. Their stock has been in the gutter for reasons we've discussed before. Their balance sheet is in as bad a shape as it can get. In US dollars, their market cap is only $2.5 billion. So funding their 490 would be 20% of its market cap. The strangest thing to think about. So the agreement for Sibanye to step up US $490 million for a 50% non-operating interest in the project. Meanwhile, the operator, Ioneer, has a market cap in US dollars of just $300 million. So they've got to pay 63% more than the value of Ioneer for an equivalent share of the project, and you don't even get to be operator of it, which it's kind of a challenging funding proposition for Sibanye to sell to their shareholders is a worthy use of their capital. When you can sort of get a see-through value in that sense. Not saying would be a bad use of the capital, like that's all project dependent and future related, but it's a hard sell, especially when your own balance sheet is really, really distressed and the PGM market is where it is right now. I think, like for them to commit to that or get some funding in place to commit to that, it's like, you kind of need the PGM market to turn before you could see that, or maybe they sell down their stake, or maybe they offload it entirely. But yeah, it's a fascinating one for Sibanye. It's an interesting announcement for Ioneer, and we'll follow the development of Rhyolite Ridge.
Well, the best indication that the PGM market is sort of the turnaround is really elongated is the fact that Russell Delroy predicted it 2 years in a row. He had to predict it again because at the end of the fundy predictions. I think it was PGM Palladium the year before, wasn't it?
The year before he predicted some oil and gas stuff. I think.
I thought he was.
We did have a big chat with Cav in, I want to say Feb of last year.
Yeah, Rusting. That's when he came out with his PGM.
Where we spoke a good bit about Platts.
I rounded up to a year.
Yeah.
We're rooting for you, Rusty.
Sibanye is a funny company, though.
It is so funny.
All the assets they have, that is a weird mishmash. PGMs, bit of
Mount
gold.
Lyell.
Yep, exactly. Got these
That's
in Australia,
copper giant with a big rehab thing on it.
Bit of uranium. They're spread across Australia, North America, and South Africa.
And because it's like NYSE listed, you can buy bloody call options and put options and all that sort of stuff. So it can be real volatile, especially because it's so geared and
it's a wacky one.
Like PGM prices change a little bit, and the stock just goes bonkers.
It could be Glencore Sibanye.
Yeah,
you never know.
Well, I think
there's a fifth player.
They've had some troubles in South Africa, but I think they're trying to repair the relationships. But yeah,
You boys are going. You go see them.
Yeah,
when you're there, you're going next week.
We'll be in the postcode.
Oh, they'll be in the district.
Yeah.
Give the boys a hoo-ha in Darba.
Pumped
Let's go
about
on bush.
that.
Go to the Congo or something.
We are.
Are you going to the Congo?
We are going to the Congo.
The DRC, not the. There's two Congos. We're going to the Democratic Republic.
Oh,
the much bigger one.
The GC, the good Congo.
I don't know. Consensus changes on which one's the good Congo every now.
Neck and neck. Stay tuned in a month's time.
That's right. Me and GC can get used to running the whole thing by themselves if needed.
Yeah.
All right, let's get into the goldies. There's a bit happening. Let's bring it back into onshore. Mega mergers, to me, aren't that big compared to Rio and Glencore, but is there any going to happen in this list? Who knows? Right, let's have a look. Let's bring up the old chart from a year and the last 3 months, see how the goldies are performing. The standouts, as you can see here, holy snap and duck shit, have a look at Catalyst. 500% in 1 year.
Amazing.
Huge.
Them and Ora Banda, I guess the high, the rebirths, the high cost producers, and they're the ones that really absolutely pumped it. Genesis up 83%.
So
over the year.
for the people just
yes.
listening to the potty,
Just go to the YouTube video and watch it. Just it'd be heaps easier.
12-month performance of all the share prices of all the classics, Capricorn, Genesis, and so on, of those producing goldies, pretty much all based in Perth.
Capricorn up another 66%. Bloody waff, 73. Now we'll go to where's me 3 months one gone? Oh, it's there somewhere. Let's have a look at, so they've pretty much, there's a few pre-quarterlies been out, few actual quarterlies. Let's go through them. There's been some real good ones. There's been some okay. Been some that are a bit bad.
And a big ding, ding, ding. GC probably owns
what's
most
GC?
of these.
What are you? Genesis. And WAF. Genesis and WAF for GC. I've got a couple of ding, ding, dings. I'll get to them when I get there. I've started my own hedge fund, CFD trading hedge fund. I've figured it out. I was told to stress test it for a year.
Yeah.
But that would not be true, Matt Michael style. Just can't. Because if I
So
made
instead
heaps
you've gone
in
on with leverage right off the bat.
well, if it's hedged, it's all good. There's no leverage. Unless they both go the wrong way, which I guarantee that'll happen the first time. But anyway, because imagine if you're doing a demo account for a year and you made fuckloads, I just wouldn't get over that. So I'd rather lose for real life. Right, first come off the rank, Genesis. They've actually so on the back of after restarting the Laverton mill back up, had a bloody pretty good quarter. So gold production, 57,000 ounces. Remember, some of that is coming from just the stockpiles at the old Mount Morgan's mill.
Yep.
And I suppose the standout, where'd me thing go? Where am I? I'm back. Ulysses is first stope fired at Ulysses. So that's up and going. Looking on track to meet their 200,000 ounce guidance. The Gwalia mill is full. They're getting 1 point because they got, had Admiral going through there. They got Ulysses adding to it now. Gwalia is still ticking along. So yeah, they've actually finally got to that 1.4 million tonne mark. So cash build of 96 million, but before investing 31.9 million in growth and exploration. So added $60 worth to the balance sheet. So they're finally made a bit of cash. So pretty well exposed to the gold price. They got the more funky hedge arrangements. They got 4,500 ounces of forward sales, but they got the zero cost collars, which I'll show here. They've also got some put options. So they're pretty close to bloody unhedged, but they got a bit of protection. So hence why they sold it, a bit over $4,000 an ounce. Another hint that come as well, which wasn't disclosed before, they've signed ore purchase agreements with Brightstar and Coumarina Resources. I think they're a private one, Coumarina. So that would indicate that Brightstar are going to send about 500,000 tonne from Second Fortune up to the Laverton mill, which I don't think was disclosed before. So anyway, they chucked like 700,000 tonne at 0.7 through that. So they're pretty much running close to 3 million tonne already through the Mount Morgan's mill. So they're, what's that, 4.4 million tonne of processing capacity they got now. So, and we'll get to later, will they need the King of the Hills mill? Don't know. Maybe not. Options. Regis, bloody in harvest mode, 149, let's just say $150 worth of free cash added. So they got up to $530 worth of cash, and then paid off did the bullet payment early for the $300 loan that was owed as part of the Tropicana acquisition. So they're now sitting at around, I'm not sure if there was, it should be 300 each, because I think they were paying interest as well before. So it should be about, they got about 220 odd million sitting in the bank now, and unhedged. So they're fucking ticking along nicely. Ramelius, another 174.5 underlying free cash flow, because they topped up their Spartan investment. So they now got 20% of Spartan.
Yep.
That's bloody, $300 worth of Spartan shares they got in the kitty, and cash and gold of 500 million.
Decent divvy there too.
Yeah, 43 million. So Because they're getting like a double sugar hit now because they've still got Penny going, but then they've got Q, the old
Oh, yeah.
Musgrave as well, coming in as well. So that's started. So now they're gonna. I think that started mid-quarter, so they're gonna have a full quarter of both going. So it'll be interesting to see when Penny finishes, if they're gonna poke around a bit more to see if they can drag that out a bit.
Yeah.
Not sure, but that's they like thin, high grade.
Yeah. They'll be one of the most motivated to do a deal, I think, because you don't want your production coming off so fast as when the sugar ends.
Yeah. Who knows? And it might not be the logical one because I don't know how big they're going to pay up. Heard like other ones, the Carasoo Dam deal. I've heard on the golf course, $1 to $1.5 bill required for that. That was on the golf course. That's just as reliable as WhatsApp.
Gotcha.
If you hear it on the golf course, sale price, which I thought one would be unders. But
the gold price has gone up so much. It's like that number seems reasonable in my head. Like,
and I think from memory, Carasoo had there was a sugar hit period that they're probably getting to the
tail
end of, and then it's probably now getting to the point like needs a lot of mine life extension. So maybe that 1 to 1.5 is reasonable, even though it's not going to produce at what it's producing forever. So a few balls in the air there. Capricorn, the good old bloody market darling. Remember last quarter we said grade dropped off. They had to do a lot more material movement. So it looks like it did recover. Grade lifted back up to 0.88, a stonking 0.88 grams per tonne. But mate, look at the bloody cost that they produce. It's friggin' unbelievable. And the material mine dropped back down. So I'll be interested to see once the actual quarterly comes out. They had a cash build of 31 mil, and then they had some capex expenditure for Mount Gibson. I think I figured out that was about 6 million. So they've added 25, but they were effectively, and they were unhedged in the quarter because that's all sort of been kicked down the road. So I'll be interested to see where's my little chart gone? They've got 16,000. So you can see their hedging kicks back in from December 2025. That's all been kicked down from there. But it says they've got a 6,700 ounce sold gold call option with a strike price of $22.60 per ounce with an expiry date of 30th of June 2025. So, and my understanding is that whoever owns that call option can call on that at any point before 30th of June. So I'm not sure if...
Oh, it's an American style option as opposed to
I don't think it can get called upon before 30th of June. It doesn't expire then. So I'm not sure if some of that was called upon or not because it just looks unhedged and the metrics lift and it looked like they would have made a bit more money. So not sure. We'll see.
Yeah.
See in the quarter. Quarterly when it comes out.
CapEx doing strip or anything like that.
Yeah, possibly. But it said cash bill from operations of 31 mil before the capex at Mount Gibson.
Yeah,
but there might have been capex in Barwinda as well, or the commencement of the expansion possibly.
Yeah, the next year should have a fair bit of capex expansion plus Mount Gibson.
So we'll see. Anyway, that's sitting in the back door, that little 16,000 ounces. So
hasn't stopped the share price tearing up.
No, God, it's bloody $7. Oh, bloody just consistent.
That's it.
WAF, bloody, they did a pre-quarterly. Ding, ding, ding for the LGC
ETF
fund, ETF inside funds and everything. The most famous stockholder in Australia. I reckon. She's getting pulled up in the street about her holdings.
This one's in the gold fund. Yeah.
The gold fund. Yeah. Not in Sammy's fund. Right. Whoa.
So these guys report on the calendar year.
Yeah.
Right. 206,000 ounces they did from Sanbrado. So Q4 was steady at 51,000 ounces, sold a bit less than that. Although the mined ounces was 73,000. So pretty chunky on that end. If you look at it for the whole year, 2024, they mined 235,000 ounces, produced 206,000 ounces. It's roughly a 50-50 underground open pit split between those ones. For the quarter, again, gold production was 7% higher That's come on the back of better mill throughput at Sanbrado. So all good on the ounces front. Again, this is just a pre-quarterly, so we'll wait to see what the costs are looking like in the full numbers, as well as what Kiaka is looking like. The latest update we'd had was that it was 70% constructed.
Yep.
So keen to see how that one's shaping up.
Mid this year. Isn't first gold scheduled for mid this year? Kiaka?
Q3 of calendar year, I believe.
Yeah. Yeah, I love the thing, the first line. Unhedged gold mining company, West African Resources. They're like, look, we're in Africa, but we're unhedged. Like,
Always.
give us some rating, for fuck's sake. Oh, that's how I read that.
We should revisit all the hedge books. See, yeah, because a lot of the companies aren't hedged now, aren't they? But,
I think I may be getting sent a bit of data, a table of the hedge book, each company's hedging and their realised prices. I will bring that to the money miners. Whoever's sending me that, let me know if I can share it. Emerald.
Keep going with the pre-quarterlies.
Let's just keep pumping them out, JD.
Couple interesting things here to start with. Couple directors bought some stock over the last couple weeks. So
that's good.
Jay Hughes, 670 grand, not just a 10 or 20 grand punt, but actual decent amount of money in the mid 330s. So that's not too far from where the share price is today. And then Michael Brown scooping up $500,000 at a pretty similar price. So for the quarter, 32,000 ounces. It's a record quarter. So decent on that front. And here's one of the real positives. Recovery's up to 85.4%. They'd previously been averaging closer to 80%. So really back of the envelope, if you just compare 85% to 80% recoveries for this quarter, you're getting 1.8 thousand ounces more. That annualizes to about $14 million in EBITDA. So kind of is a good little kicker and probably worth the investment. Not sure how much they spent on all those upgrades and whatnot, but in time that should come good. So the company now holds $243 million in cash. At the end of last quarter, that was $180 million. On the debt side of things, they should make their last prepayment this quarter, so March 31, and that will be circa 10 million Aussie bucks. So shortly they'll be debt free with a decent amount of cash, and just on the cost fronts, flagged to be within the guidance range, which is 810 to 880 US all-in sustaining cost, but we'll wait for the full quarterly.
And being helped along by the Aussie dollar being at 61 cents. All these US dollar companies with US dollars sitting in the account, like WAF and Emerald,
On the bank account side of things,
and everything they earn, it's like getting better for. Oh, well, I suppose not on the gold price, but everything they got sitting in the bank is definitely getting helped.
Yeah. Keep the party going.
Cabot, but there you look at this quarterly performance. They've actually friggin' what are they going from $4.40 down to $3.50? Actually, haven't performed that well in the quarter, Emerald.
Yeah,
but it looked
from a share price perspective.
It looked good. Catalyst, the bloody good old Plutonic. Bloody, as we said, absolute ripping 12 months for him on a share price bloody seam over $3.30. So
even since Christmas, even since New Year's,
well, it had that big drop off and then straight back up.
Saw the New Year in at just below $2.60. So that is not a bad rally for 3 weeks of work.
Take us through it, JD. Mate, you did this one.
So market cap 750, EV of 670. The business produced just over 28,000 ounces for the quarter at 2,350 Aussie all in sustaining. They guided to between 2,300 and 2,500 for the year. So at the gold price that we have today in Aussie dollar terms, that gives them about a $2,000 margin, which is just awesome, really. And they also made the final loan repayment. So these guys have just been on a real tear on the business. A lot of things have gone their way. A lot of hard work, I'm sure, has gone in, and they're bearing the fruit for all of that. So $35 million was generated from operations. $9 million went out the door on various growth aspects, on the expanding production and exploration, these sorts of things. Again, super simple. If they deliver 115,000 ounces for the year at 4,300 Aussie gold, and they deliver at the midpoint of their all-in sustaining costs, they're going to produce $220 million in EBITDA, which is very tidy and
got a bit of capex to come ahead this year.
Yeah, you got to take off the capex, of course. And they're growing, but from where the business,
what's EV about 3 times if they
Yeah.
produce that. Yeah.
3 times. So just from where the business was a little while ago, it's been such a turnaround, and hopefully the things keep going in their favour. I'm sure there's
I think that's Salhenti.
I think they try to. Not sure how much they kind of get.
I'm sure
get for it.
Sure they'd want to.
It
Trying
just
to
makes
find
things
a
a
buy.
bit
simpler.
Give it to Sabania. Sabania could become a Tasmanian powerhouse.
I'm sure they'd love to get their hands on it. Yeah, I mean, for the court.
Just to make themselves more complex.
Exactly. That's what shareholders love. So,
You know
yeah,
what
keen
Sabania
to
paid
see.
for Mount Lyell?
Oh, it's fuck all, wasn't it?
$10 million.
Yeah, yeah.
They had to
Isn't it like,
exercise an option for $10 million.
yeah. What's the liability on it? What is it? It's pretty big, isn't it?
I think there's a few challenges. For sure.
Yeah. Right. Might be starting to get a little bit more going the other direction on cash and everything with the upcoming Westgold. Now, this was a very interesting one. Obviously, group production lifted on the back of the Karora merger. So what they pump out? 80,000 ounces produced, up from 77. So starting to pump out some decent size amount of ounces. They did acknowledge at Bluebird South efforts. A modified ground support regime was implemented. So I assume they must have had some ground challenges at Bluebird South Junction, unless they're like, fuck, this ground is awesome, let's put less ground support in.
I don't think it was that.
You never put that one in the
Yeah, that'd be the go. So I don't think that was the case. But if you're just looking at the cash, so they sort of snuck it in. The cash, bullion and liquid investments, 152 mil. So because obviously got the share in New Murchison Gold. I think that's their only holding. Or if they got a bit of in the pro forma with the Cali holding, I think that got divested, didn't it? Then you go, I'll just shut up because I'll bloody end up saying something wrong as per usual. But together with 250 million undrawn from its 300 mil corporate facility. So you look back at their previous quarter, closing cash and bullion of 103 million, but now it's 152 million.
Means they drew a bit of money.
But as I said, they drew their 50 million, so they've effectively made $0 unhedged operationally. Free cash flow was zero. So which is concerning at these gold prices. So why is the question?
Yeah.
We did know about their pretty big, decent size payables, trade payables. Were they paying some of that down? Don't know. And whether we know that, might see that as a working cap movement in the waterfall chart in the quarterly, but the half year accounts are going to be interesting to see what their payables are. So and as I've always said with their payables, the fact that they're owner operator, because usually, most of the other producers with a contractor, your biggest creditor is your frigging contractor. So they don't have that. Where they do have other suppliers. So that even says the high amount of payables is even more concerning because they are an owner operator because they have to pay their workers and everything straight up.
Yeah.
So
I remember when we looked at that, it sort of looked like they would, like post deal, they might have paid some of that down. But still, it's the quantity of ounces they produce is a very large number, and you hope you capture margin as the gold price rises with that big quantity, but the cash was disappointing the market. They sold off a fair bit on the day from memory. It was like 15% on the day or something.
Where is it? We can check the candlesticks.
They might have bounced a little bit since.
Well,
it would have dropped from a bit below 280 to 250-ish at the lows.
Which is that big red bar there on the 8th or so. Yeah.
Remember their silly synergies number that they put in with the Karora?
Yeah.
Where are the synergies?
Another thing with them is and there's the difference between owner operator at this scale for these sort of things compared to a contractor is it's like who is running it? Do you have the tech services team, like the underground manager who's an engineer? Are they running the underground like the contractor as well? Like when you got a contractor like a Barminco or a Burncut or a McMahon in there, like they've got their project manager, their engineers, like they're running the contract, and then you're designing the levels and you work together. When you're owner operator, a lot more responsibility. Are they trying to run it all as one and it's maybe not working? Do they need to sort of separate the mining services from the tech services and run them independently? Don't know. There's a bit going on there, I think.
Remember our intel that like Karora was set up to have a pretty nasty kind of half or something at some
Yeah,
point
because I
before
think
the
the
deal.
timing of the deal was they had to get it done in time. So
Some of that
Karora
coming
didn't
out.
release their latest quarterly, which was a shit one.
Yeah.
I think so. Whether that's been
Sort of ran hard
swallowed
to
up
the
a bit.
finish line and then hope it all can get washed out in all
Yeah.
these combined
Yeah.
numbers.
Oh, and look, this is very early days for the pro forma. Like, they've still probably got a lot of work to do it to get Beta Hunt to, operating in under the West Gold banner. So, just a bit happening. We've got our eyes on.
Great Fingal not too far away now.
Yeah, that's going to be an interesting one, because if that is based on historical performance of that mine, and yes, it's on not as many drill hits, but if they can get a positive reconciliation on what they're predicting out of there, that could be a pretty good kicker for that business, because it was fucking a pretty ripper back in the day.
Next quarter, I think we should see
assuming
ounces
that
coming.
every gold ore body continues, so that's going to be an interesting one. Orabanda, OBM. Oh, ding. The what am I going to call my hedge fund? The Steve Ray hedge fund. That's illogical. Everything gets called. My smoker's called Steve Ray at home too. Anyway, Orabanda got a ding, ding, ding for that one. So they're guiding to 105,000 ounce midpoint at 2050 all in sustaining. So they've produced 47,000 ounces already for the first half. They've actually come off a bit this quarter. So obviously had a pretty good valuation for what the metrics coming out, but it was, they're really backing. Seems like the money's backing the management and the plan and everything. And so they got Sand King coming on this quarter, so they're saying that'll add about 21,000 ounces to production. Cash only lifted 9 million. They're attributing 30 million, saying because of 30 million of growth capital being spent on the mine and resource development and exploration expenditure. And you can think, right, is 30 million high? But look, if they're going to be producing from Davyhurst for a long bloody time, it's a big tenure, you're always going to be developing deeper, which is growth capital. You're always going to be infill and extensional drilling to go deeper. You're always going to be bloody doing exploration on the tenure to find the next one. So it might not be 30 million, but it's not going to be bloody 10 million going forward. These operations are always going to have growth capital if they're going to stay on if they're going to go deeper and find new bits on the tenure, there's always going to be growth capital.
If you want a business next year or the year after.
Yeah. So unless you're going to buy something else that already has the stuff there. So yeah, I don't get sucked into the fact that 30 million is it's just a one-off. I don't think it's going to be a one-off. I think there's always going to be a good chunk of growth capital there.
What about the all-in sustaining, Matt?
So that blew out, and which probably was well above what the analysts were thinking. That was up 11%. So that was 2,500 an ounce quarter on quarter. So they attribute that sounds like they've depleted all the stockpiles. So the higher cost stockpiles. So that obviously adds, that's what they call it, it's a working cap movement, isn't it? Inventory adjustment on the all-in sustain and when you're processing stockpiles.
Yeah.
Same as what Silver Lake do at Daisy and all that.
Yeah.
It's non-cash. Yeah.
Whatever that is. Yeah.
You got to mark them at how they came in back in the day.
Yeah. So, and then that, what was it? Non-cash share-based payments for $116 an ounce. So anyway, see once Sand King comes online and everything, if that sort of tracks back down. So, but there's still, single it's sort of not single asset now, because you have got Sand King, you have got Riverina. So it's one of them ones. If it all goes to plan and they hit guidance, be all good. I just look at underground to open pit is you compare this to, say, a Capricorn in terms of consistency, deliver and back and management. It just feels like to me underground you can have shit go wrong a bit easier. So as long as nothing goes wrong, everything gets delivered, nothing goes wrong underground, buddy, should be all good. So all pending. But they do have 2 operations now. So sort of not
1
as
mil,
much of a risk.
Two feet feeding it. Yeah.
Yeah, so pretty
Save the-
hefty bloody value. Yeah, see how we go. Bellevue.
Best for last.
Ding, ding, ding as well. I have a position in the Steve Ray hedge fund. Bloody,
Long.
well, I don't want to say, I'm going to give a balanced view on everything and will not disclose whether she's long or short. That is my way.
Give us a view, mate.
20, so this was probably the biggest downward pressure one, you'd say. 26,000 ounces sold at $3,339. So it appears pretty much all the gold sales, bar maybe a couple of thousand ounces, were delivered into the forward sales and the collars that you can see on the chart here. So they didn't really get much exposure at all to the over 4,000 bloody ounce gold price, because the previous guidance was, remember, 165 to 180,000 ounces produced. They've downgraded that pre-quarterly to 150 to 165. Didn't give any cost guidance, and maybe that's probably why they only disclosed what they've sold. They didn't say what they produced. Not sure, but the cost guidance will be coming out in the quarterly, which I think will be back end of this month. I think it's about are they scheduled as the 30th? I'm not sure. So, but typical numerator denominator relationship. I'd say if ounces have gone down, costs are going up. Probably a bit higher than the $1,800 an ounce they did guide in that was only in their September quarter. So yes, we'll wait and see. But they said they did comment here, the second half gold production is forecasted to be approximately 90,000 ounces. So that'll be, the best they've produced prior to this was, was it 42?
Wow. So
I think so.
Very back ended.
Got to get two quarters of record production.
Pressure's on.
I wonder how much of that is driven by grade, and I wonder how much of it is driven by ore volumes.
Yeah, well, they did comment on there saying it was lower grade.
Yeah.
Due to the mine sequence progressing through the outer edges of the ore body. So that is saying, and they put that down to the Marcelin, Bellevue South, and Almond areas. So that pretty much, if they're mining the outer edges, that is because you pretty much put a drive in, you go out to the edge, then the first stopes you take are from the edge. So it would imply for those three sets of ore bodies, they are all retreating on the edge of the ore body together, which you could infer that they're probably waiting on the development to finish to start drilling to get those stopes going, and which they did point to interactions between production and development. So it was actually the first time they actually said, I think, and correct me if I'm wrong, but they specifically said that interactions between production and development. So meaning that they're sort of on top of each other. And when I guess mining all those outer edges together, when you probably know the grade, they probably knew the grade wasn't. They've done a shitload of infill drill and they know the grade. It means the schedule sort of hasn't gone to plan, because that one was probably supposed to be in the higher grade section while you're mining the lower grade there to balance out the ounces. Obviously hasn't gone to plan because the development isn't where they needed it to be, which heads back to maybe the mill got turned on too early and development wasn't far enough ahead and stoping's just caught up too quick. So, it's going to be, it's just that's the thing, when you're longitudinal narrow veining, you're sort of locked into that sequence. You need to mine from the edge to the end, unless you just want to blow up the intersection and take the high grade straight up and develop back around. But that is a bit counterintuitive. But so that's the joys of narrow vein gold mining. So it's just interesting to think on an EV basis. Bellevue's EV, 1.38 billion.
Did you throw in the out of money value of the hedge book into that EV?
No, I didn't.
Yeah.
So what would that be? So I think it was 200 mil around.
Okay,
So what's
plus 200 to that, 1.58 billion.
1.58.
Yeah.
Same EV as Spartan.
Wow.
Yeah, and with
which isn't fully funded, you wouldn't say. Oh, maybe you could say.
Well, it's probably fully funded, but it's not developed.
Not production.
Not long way off producing. Still undetermined. of how it's whether it's gonna backfill the value. So yeah, it's like when you stack them up and Bellevue, obviously Spartan's been drilling down to a kilometre and they've drilled a shitload of it. Bellevue, shitload of exploration upside there, no doubt as well. So it's like there's a case of like, okay, they've lost 20 million for the quarter. They're back to 80. They've still got 100 million owing to Macquarie. So will Macquarie be, will they potentially be breaching covenants again? Like, will Macquarie come knocking for the last 100 million? Will they need to raise money again to get themselves out of the shit? Versus, well, they've got all this infrastructure and a mine in place that pretty much just needs a production reset. Production just needs to be slowed. Development needs to get ahead so it can run. The gold's there.
Yeah.
Like, and will fucking Goldfields, who have got Agnew 60 kilometres away, start looking at it? Will Genesis think that their scrip is better used buying a Bellevue compared to just if they've got the processing solution already, maybe they don't need Volt?
That was meant to be the reset that we saw, whenever it was 3-4 months ago.
Yeah, I don't
that's
think
what management
enough of it.
That's what management wanted that to be.
Yeah.
So it's crazy we're talking just in January already that they need a reset. Although on the other hand, it's getting almost contrarian to say you like Bellevue. Everyone hates them.
Big underperformer. Like how many gold producers went down year to date last year?
Yeah.
It's like, but it's will people pretend? I'm sure plenty of companies are looking at them. Will they think, oh, we're going to wait a bit longer or not? Because it's like pretty it's stonking ore body. It's just needs a decent operational reset and probably the focus taken off it as a single asset in one company. Chuck it in another company where they've got multiple. Like I can't comment on bloody where the development and all that is at Gwalia or Ulysses for Genesis or bloody, what's going on at Admiral. Like when they're all mashed in one, it's like
it's less focused.
I don't know what's going on at King of the Hills.
And the funding.
Like when you focus on one asset, it's the eyeballs are on it.
Yeah.
So we will bloody see.
And to that point, it's hard to have if there's a reset's required, it's hard to do that when you've got like debt repayments to make as well. You can't. How do you take the time to do it? So that's where the diversified portfolio helps a bit more. Yeah.
Exactly. Yeah, because they can't. To reset, you need to slow production, get development ahead. For that, you need money. Yeah, which is the other direction of paying money.
Yeah,
for debt.
Some people will be licking their lips though.
Yeah,
yeah.
One way to think about the debt too is like it's not that much debt left relative to what their market cap is. It's not like a.
Nah.
Yeah, but it is. It's still $100 million.
And the fact that they've only got 80 and they went backwards, and they've still got the hedging in place, which is
tricky too.
They need that bloody 45,000 ounce quarter. Very much so.
Bit of pressure.
So we'll wait and see. Could get interesting there, I think. You just got to think of what you don't expect.
One of the goldies.
Maybe them and Spartan could merge. They're the same bloody value.
It's interesting.
Who knows? Something's going to happen this year.
That's probably true.
Not one you guys wrote down and not a producer, but did you see the Bullabulling deal last week?
Yeah. Bloody.
That was interesting.
What was it? 200 odd in cash too.
Yeah.
Like cash deal for a
MI6 picking it up.
50 mil market. It reminded me of the ratio of when Northern Star bought Paulson's.
Yeah.
Like 5 mil market cap and a $40 million acquisition.
Yeah.
All in cash, I think.
Yeah, they've got to do a big raise. I mean, there's a process before they'll be able to be quoted again. But yeah, I found it interesting, not just for that reason, but I haven't seen someone do a deal with ZGN in a long time. It'd be interesting to follow. Now you've got another undeveloped, growth project out there in WA, which has just kind of been dormant and idle for a long time in ZGN's portfolio, and it'll be now be framed as a developer.
Those left-wing ones are really interesting. Those projects, the ones we're not even talking about, like when Capricorn picked up Mount Gibson.
Yeah.
When Emerald picked up
North
Laverton thing.
It has to be part of like some bigger plan, because it's like they did talk about average recovery.
Yeah,
because I think
recovery's
it's
not great there, but
no, and I think it's good in parts, but it is refractory in parts as well, like average recovery. So there is refractory components, and considering Paddington's got the mill for that now. It's like, will it have to go to Kanana Bell, for instance? Could Kanana Bell be an option? Like, what are you going to use to process it? Because it is refractory to nature.
You see these like rehab heap leach pads from last time it was producing in the 90s, I think. So yeah, TBA. Like it's the footprint's quite large too, and it's literally underneath the Goldfields Highway too. But there's enough either side you can.
Yeah, because it goes under the pipe. So there's a chunk there they obviously can't take.
Yeah. But yeah.
I'll see what. Yeah, I'd be interested to know what the processing solution is. So I don't know, KB. I've got my eyes on KB. That is going to happen in a decade or so. Something will happen at Kanana Bell in a decade.
Alrighty.
Oh, there you go. God, that was a bloody stonker.
Wicked.
Geez, you missed us. You got fucking an hour, 15 minutes. What more do you want, money miners? Oh, bloody thanks to all the partners. Jeez, I've missed talking about these bastards. Mineral Mining Services, MMS, Grounded. Sorry, James Marlowe, your hat got a good enough run, mate. We've got a Grounded hat on now. Sandvik Ground Support, our Insurance, K-Drill, DashSat, Saltbush Contracting, Get Wet Solutions.
Hooroo, money miners.
Hooroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.